Well, hello there, everybody. Good morning and welcome to Thursday, February 5th, 2026, 6:30 a.m. Central Standard Time. We back for another day. What we got going on today, ladies and gents? Well, I tell you what, I'm still hanging on for dear life in my Aussie US dollar long position. It's the position I got in on Sunday when the markets open shortly thereafter. Still going strong. I say it's hanging on for dear life because from its peak, after it did jump up pretty decently, it's kind of retraced and just kind of slowly grinded back downwards. But I have given it some wiggle room. Let me get my charts up here. I did give it some wiggle room to, hopefully see if it can kind of turn things back around in the positive direction. So we'll just take a quick peek at it over here and see where we're at. Aussie dollar. Holy cow, everything got super wide on me. Let's move that over. Yeah, so remember, refresher, I got in back here on Sunday. We got a nice push up. And I'm a little surprised because this supply zone right here is the one that seems to be the one that's turned it around. I kind of figured it would go through this one because there's another one just beyond it with a much larger gap. So that's the one that I was, assuming would be the one to kind of catch the ask and, if anything, toss it back down before going back up. So just so happens to show you that this supply zone here is the one that caught it. Okay, caught it there. I mean, pushed it down immediately close to this new supply demand zone, but then just kind of retraced and just starting to make a series of lower lows and highs on a 1-hour chart. But not yet on a 4-hour because we would need to obviously blow through the demand zone that I ended up buying in on. So, but the reason I am still in this trade actually is because, under normal circumstances with my entry here with this supply zone up here, I would have probably split the difference on my moving my trailing stop up, to catch in. And this wick right here would have ordinarily been the one to cash me out right here. But because we did have this awesome looking demand zone, I decided to, just move my stop loss below it as opposed to, like the midway between the demand zone and the supply zone. So I figured that this would be my line in the sand. If we break this, then I'll go out for a small gain. And we bounced into it at one point yesterday, midday, and got a nice push up and thought we might get a continuation, but everything just kind of reversed. About 8 o'clock at 8 o'clock p.m. my time last night. So, we're still hanging on. Again, if we break that zone, then I'll be taking my profit here. Okay. So it wouldn't be as good looking of a profit, obviously, as if I would have taken it up here. But this is just part of trading. It's part of trading. You never know where prices are going to go, even with your best analysis. So if anybody tells you different, I would not pay attention to them. They're trying to sell you something. I ain't trying to sell you anything. I'm just trying to show you how markets work. Okay. My 12 years of experience. I don't have all the answers. I don't know all the answers. That's transparency for you. Okay. That's transparency. But I've seen enough of these zones and bounces and reactions to know what usually happens. So when I say usually, that does not mean every single time, right? So yeah, like I say, normally I would have been out on this wick right there, but because we had this zone a little bit deeper, I decided to stay below it just to see if we can get a bounce and a curl back up. And we still may, or it may turn around and just blow through and stop me out. Who knows? But at this point, it's hands off for me. It's been hands off ever since I moved my stop loss over here back on Tuesday. Okay, when we bounced into that supply. So that's it on my Aussie dollar position. We'll leave it alone. Let it do its thing. We got a whole 2 trading days left, 2 intraday sessions, to see if we could, kind of reclaim and close a little bit higher up here tomorrow before the weekend hits so that I can get out of the trade and not have to stress over it over the weekend. So, yeah, because I'm just still not quite in the mindset of holding trades over the weekend. not interested in it right now. There's always new opportunities next week, right? So don't want to put all our eggs in one basket. And yeah. And by the way, I did get in. Hello, Mr. Peeps. Good morning to you, sir. Or afternoon to you, rather. Okay, let me think here. All right, we'll get back to that in a minute. So as far as today's economic calendar, guys, we've already had the rate statement for the British pound that has come out, where they did keep rates the same right here at 3 3/4%. So I'll get a readout of the speech, much like we did the other day for Australia's. And tomorrow morning, Friday morning, I'll do a quick, half-page readout of it, just a half-page summary. But they're going to be doing their lip flapping session, here in a little. Well, actually, it just started a few minutes ago. But it's like watching paint dry, watching grass grow. It's not exciting stuff to watch. So we'll just skip over it, and I'll give you guys a readout of it tomorrow. Because at the end of the day, I don't really care what it's doing. It's not going to affect me necessarily because I'm not a 5-minute trader, right? So that's more longer-term stuff. So I'll get a readout of it rather than sitting and watching the speech live, right? I'll put you guys to sleep doing that. So anyway, yeah, Governor Bailey, he is flapping his lips as we speak. The Eurozone, they got theirs coming up here in half an hour, rather, 45 minutes. They've got their rate statement where they're projected to keep their rates the same as well at 2.15% with their lip flapping session to follow. And then we've got our weekly unemployment claims coming up, projected to go 3,000 higher on the claims, on the unemployment claims. So potential little bit of weakness there as well for the U.S. dollar, but I wouldn't say by a whole lot, guys. 3,000 of a difference on a $200,000, report's really not it's not anything earth shattering. So I don't think we have to worry too much about it. JOLTS job now and I do believe we are still getting that. That the partial government shutdown has affected some things, just like we were supposed to get non-farm payroll tomorrow, but that has been delayed from what I could read. I thought I read one article saying that they did get it reestablished, but I think it was a fake news. So as far as I'm concerned, I don't think we're going to be getting that non-farm payroll, guys, tomorrow. So that's just one less variable to have to worry about if you're in a trade already that is influenced by the buck, which is pretty much every single one of them, even if it is overseas. But hello, L House. Good morning. Good morning to you. So yeah, anyway, claims coming in here at 7:30 my time. JOLTS job openings at 9 a.m. my time, Central Standard Time. And JOLTS job openings does not have an actual number. Let's see if we can find. I'm going to go look at another economic calendar, guys. If you're ever looking to diversify your economic calendars, another good one is RebateKingFX.com, like you see here. This is another pretty good calendar. Now, what's different about this one versus Forex Factory? Okay, what's different about these two? I'll tell you. The main thing to me is Rebate King is actually a lot more in-depth. It's a lot more, it kind of shows the different reports within the reports. So just a simple thing like, let's find an example. In fact, here's what I'm going to do, guys. I'm going to get rid of the light impact events on here real quick. So give me 1 second. Filter. Let's get rid of the low and the medium. Let's save that. And then let's do the same thing over here on, we're going to do the same thing over here on Forex Factory. So they're both good. But the biggest difference that I see is, with Forex Factory, it kind of simplifies things. For every report, there's usually a couple sub reports that come out alongside it. But what Forex Factory does is just kind of groups everything into one simpler view, if that makes sense. So if we look at something like the rate statement that we just got for the British pound, you guys see there's 1, 2, 3, 4, 5 items there that's related to it. Let me go count on the. Let me go count on the other one. What is today? February 5th. Okay. 1, 2, 3, 4, 5, 6. See, this has 6 things. So it's basically sorting out some of the things in here. That's probably not the best example. Let's look. Euro has 3. I don't think that's really a great example. Let's go back in time a little bit. Inflation. Perfect idea. Let's look at yesterday. Let's look at yesterday's inflation number for the Europeans, the Eurozone. See right here, we got union core inflation, union CPI, union inflation, month over month, year over year, and then they even throw in Italy. So see this, that's basically what this one does is it pulls out some of the sub things, but it gets a little confusing to me. So that's why I don't use this one as much. I kind of use this if I'm ever seeing a potential error over here on the Forex Factory. I'll use this to kind of cross-reference it if that makes sense. So otherwise, it's a pretty good one. It's a pretty good one. It's just a lot more detailed, but sometimes we can get paralysis analysis, in my opinion, on Rebate King FX. And plus, this is the one that they use on the first trading challenge I bought. So, you know, I just kind of keep it as a favorite in case I need to reference it. If I need to verify, hey, something's showing tentative over here, or something is showing, like right now, we got the JOLTS number down here, but it's not showing any forecast, right? So let me see if that one specifically has a forecast over here. Thursday, JOLTS. Where's JOLTS? JOLTS. Yeah. Okay, so here you go. Okay, JOLTS. We actually have the previous and the forecast right here. So today the forecast is to increase. So that would obviously be a slight, positive note for the dollar, 7.2 million right there. But as you can see over here on Forex Factory, the same report, we don't have that. It's just showing blank. So that right there is why I like to keep Rebate King as a favorite, and I've seen it go both ways. Sometimes I've looked at this report and it not have a forecast on there, but then I go to Forex Factory and it's on there. So it's just good to have 2, maybe 3 calendars on standby for you. That way, if something's not reading on whatever your favorite calendar is, like Forex Factory, then you can just go cross-reference the other one and see what the number is. So, but as always, if you're sticking with myself, if you're sticking with Trader Nick, we're always on top of these calendars, or any of the other awesome guys over there at A1. So anyway, yeah, just going back today. So yeah, we already know the JOLTS job opening is expected to increase. Okay, so that would be good. And then of course the flip-flap session to follow after the Eurozone rate statement. Unemployment claims slight negative. So if these numbers come out as forecast, then it would just be a little bit of mixed data for the US dollar today, because that's the only 2 high impact events. Well, yeah, that's the only 2 high impact events. And as you can see, they've already gotten rid of, over here on Forex Factory, they've already gotten rid of the non-farm payroll. That's the other thing. Sometimes some of these calendars will keep, like during the government shutdown, I really noticed that some of these calendars would keep the reports on the schedule as if they were being released, even though the government was shut down. So a calendar like Forex Factory does a good job about getting them off the calendar so that we don't have to worry about them or get confused. So anyway, that's that. Good morning, Zambezi. Good morning. Hey, you guys, let me know what you're trading out there. About trading out there. I'd be interested to see. Oh, I'm getting alerts already. Let's see what we got. I think that's old news. Let me go over here and look. I got some Amazon, boys and girls. I got some stock yelling at me over here. Okay. There's Amazon. Well, Amazon is actually, if we look at the stock box, okay, this is another product with A1 Trading's explicitly for stocks, but we do have Amazon that's giving us a +8 score. Hey, it's looking really good. It's only missing on one item. That's the price to sales number. Other than that, everything else is looking pretty nice and green / neutral. So Amazon giving us a pretty nice buying signal. Let's take a look at this demand zone again. Let me go to a daily real quick. Hey, this is Amazon. Now I know this is more of a Forex show, but hey, we had a stock alert hit. So let's talk about it. Higher highs and higher lows, as you can see. Now this one was a little sketchy up here, guys. This did not make a new high. It kind of made a double top, I guess. So we have now come down to this demand zone. Look at that nice indecision gravestone candle, or whatever they call it. All my stuff's falling off my desk over here. So, hey, that looks like a pretty good zone to buy from. Now, the only thing I'm a little cautious about is the fact that that made a double top and not a new high. Okay, this wick right here, basically, Aussie Swiss is hitting. We'll take a look at that in a second as well. As you can see, okay, this supply zone bounced off this supply zone here, and then it turned into its own supply zone and dropped price back down. So am I really that worried about a zone that created itself from another supply zone? Probably not. Let me get my good. Okay, probably not. Probably not. How about the curve analysis? Am I low on the curve? Okay. You got these swing lows down here and these swing highs up here. Does it look like I'm in the bottom third? Looks like it to me. I think we'll pass that. Now, it's the pre-market, so I can't place a trade even if I wanted to. But it doesn't hurt to take a look at it and plan for 8:30 my time when the market opens. Okay, there's our swing low, swing high. So you can see we're in the bottom third. So there we're buying a discount if we buy down here. Okay, so that's good. We passed that sniff test. Go to the 4-hour. Now, this is not a 4-hour demand zone because if I turn my drawings off, guys, and this is good for example's sake, even if you guys don't trade stocks, right? Because supply and demand, it works the exact same over on stocks, over in the stock land, okay? Mr. Peeps is trading pound yen. Quite liking the amount of daily movement that has. We spoke about it yesterday, the BMF. Yes, yeah. The ATR, the average true range. Yeah, you're taking that Lamborghini for a spin. Is that right, Mr. Peeps? Okay, that's good. We'll take a look at pound yen here in just a second. Be interested to see myself, but yeah, just to take a look here, guys. I do not have a 4-hour demand zone right here because if you look at these candles right here, they're overlapping wicks, are they not? Okay, they're overlapping wicks, so that's an efficient price structure on a 4-hour time frame. Now, that's a 4-hour time frame. So we'll just drop and take a look at some smaller time frames. See what we got. In fact, I think, yeah, here we go. 2 hours. So this is our 2-hour time frame, and look what we got. That's about as beautiful of a indecision candle as it gets, is it not? So that's our new demand zone right there. That's where we're bouncing in as we speak. But again, it's pre-market. I can't place a trade. I don't have a broker or anything that allows for that. I used to when I played with penny stocks. I used to have an account where I could buy pre-market like this, but yeah, I think I put a little bit of money in that account a handful of years ago and pretty much lost it within 6 months. So if you guys want to feel comfort in listening to me, just know that I've been there and done that. I have become a statistic, a casualty, but that's who you would want to learn from anyway, is it? Is that not the truth? Somebody that has blown the accounts. Okay. Every one of us have blown accounts. We can't be a teacher or coach if we haven't blown an account. It's like a rite of passage. But blowing an account, losing a sum of money, that's going to be the best teacher ever. It's going to teach you more than anything I can teach you. Right? I mean, I can show you the door, or I can show you how I walk through the door when I blew the account. So that's why risk management is at the top of everything I do now, which is what I was taught. So again, perfect example. I was taught risk management and at Online Trading Academy when I got my certificates for trading stocks and Forex, and they beat it into our heads. Well, they could beat it into our heads all they want, but some lessons are learned the hard way. Mama can tell us not to touch the stove as a little toddler. Yeah, it makes sense, but until we touch that stove, we haven't learned anything, right? We learn pretty quick. Pink sheets. Uh-oh. Let me read. Trawling through the pink sheets. Always think of the Wolf of Wall Street. Yeah. It's funny, Mr. Peeps. That's the whole thing. That's the whole reason I got started in trading, was the first time I watched the Wolf of Wall Street. I just thought it was, wow, that's kind of a fun little setup. Everything but all the illegal stuff. Come on, guys. I got no interest in all that. But yeah, it just seemed pretty cool. I like the hustle and bustle. I've always been a people person. I've always liked, I used to do a lot of karaoke, guys. I used to go out and sing all the time. I used to be not used to, I've always been a people person. So when I saw the kind of the camaraderie within, I thought, well, wow, that's pretty cool. It's a pretty fun looking team sport. So that was really the first thing that influenced me into getting into trading, was just watching that. And I remember I got into, I didn't get into anything. I found a fund. I think they were called Apiary Fund. And I don't know if they're a prop firm today or if they're just a brokerage, but shortly thereafter watching that movie, I got online and started, just investigating, seeing what the hell Forex trading is. And they had a free chart just to kind of like a demo account. I remember this was 2014. Okay. But I found a demo account where you could get one for free and test it out. And I just remember going in there and buying and selling, and whatever I bought the first time I did it went up and, made some money, or made some monopoly money, if you will. And I just thought, well, that's cool. That seems easy enough. I didn't know what a candlestick was. I just saw the trend was going up and I bought, right? The typical thing that we all do at the start. And I didn't know what a breakout was. I didn't know what a demand zone was, or a supply zone, or candles, like nothing. Oscillators, indicate. I didn't know what any of that crap was. But for some reason, just going through and testing that out made me think, wow, okay, I don't know what the hell I'm doing, but I made a few bucks, right? So it just I kind of got hooked on it. I'm turning my heater off real quick. Got hooked on it. So anyway, yeah, the rest is history. I took my classes, gritted and grinded, and here I am today helping you guys. So I'm sure they're designed to make you win to start with. Yeah, they got to make you feel good. They got to give you that. They got to give you something to get hooked on. All right, guys. So yeah, Amazon. If this price point is down here when the market opens, after the pre-market, I may possibly buy into Amazon, because we're quite low. We got a really beautiful demand zone on a 2-hour time frame. If I can get some type of maybe a 15-minute, we'll probably stick with 5 or 15 minutes. We'll just go down here to the 15-minute chart, and this is basically what I want to see. I want to see a break of structure of some kind, and this may not happen today, or it may, but let's see here. Yeah, that's basically all I need to see, a break of this structure, and then a retracement back to a demand zone, something like that, because we're already in the zone, right? So if this can turn into an impulse leg, and it's the definition of impulse leg, as always, guys, is a leg that breaks structure. Okay, if we got to break this structure, preferably this highest point right there. If we can break that highest point and close just above it, okay, that's at least that's price telling us that we're trying to make a reversal. We're trying to go back the opposite way. That the unfilled orders that have started to get chewed into down here in the zone are actually starting to work. So that's our proof. But I don't want to buy up here because that's buying a breakout. And I don't like to buy breakouts unless it's inside of a zone. I like to buy retracements to get a better price. So, this is just kind of guessing, but we'd want to get a retracement down to a new demand zone somewhere down here. It can be here. It can be a little higher up like that. It could be at the 50% line, but preferably around the 61.8 area. If we're isolating this swing low to swing high for your fibs, okay. It's another possibility. If you want to skip the zone all itself, then you can just buy a simple retracement back to the 61.8, okay, like that. But that's why, so yeah, you got a couple options there. But that's what I'm going to do when the market opens, the regular New York session, and we'll see if I can't get into a stock trade today. How about that? It's been a couple weeks since I've been in a stock trade. I've just been so focused on currencies lately that haven't really had a lot going on. So what else? We had Aussie Swiss that went off. This one's annoying. This is one I've been watching a while. I was watching it over here. I was looking at this demand zone. This was yesterday. I wasted way too much time, guys, sitting here watching this. We bounced into the zone, but I was so sleepy, guys. It's hard for me to get to sleep. It's like midnight when I get to sleep. And then I get up at 5:30. But I was sitting here looking at my trading computer thinking, man, I really want to buy into this market right here and just take a retracement to this area here. But I was just so tired. I ended up taking a 2-hour nap yesterday, guys. So yeah, that would have been a nice 2-to-1, 3-to-1, but I just let it go because, well, number one, I was already in the Aussie dollar long, so I didn't want to double up my risk on my main two accounts. But the reason I was watching is because I have my brand new instant funded account. It's a 100K account, and it's also a new trading strategy. So just did not feel 100%. I felt 90% certain that this was going to work out, even if it did just, bounce and retrace to the kind of the swing high area, which is exactly what it did. Yeah, maybe a little bit lower, but I just let it go. My moving averages wasn't quite where I wanted them. My new trading strategy involves moving averages. Okay. The 8, hold on, let me go look again. Yeah, the 821 EMA, this is basically to show me where my trend is. And then 50 to 200 is where I enter on a retracement back to those. So I might go through this strategy at some point. I'm just kind of testing it out, guys. I don't want to roll it out until I've had some time to actually place some live trades on my own. I've back tested it and it works really well with what I already do. So I'm pretty excited about that. It's basically just an extra filter. Well, I saw something in here about karaoke. What's my go-to song on karaoke, Mr. Peeps? Oh, yeah. You know what? For whatever reason, the ladies always liked it when I sang Pretty Woman by Roy Orbison because of the growling part in it. Yeah, so they would always say, Pretty Woman, please sing Pretty Woman. So that was one of my go-tos. All right, guys, let's go have a look at your pound yen. And right before that, guys, let's just take a quick look. So when it comes to the top setups over here, number one, pound yen is a +7. So you're looking good from a fundamental sentiment point of view. A lot of these yen pairs are still on here. I think pretty much, well, almost all of them. Okay, as far as selling the yen, well, that's not a surprise at all because if we go over here to the macro scanners and we look at the currency index for each of the majors, the Swiss franc is still the weakest currency. Okay, say 33%. The yen and the CAD are right behind it, though, at 40 and 42%. Now, by the way, New Zealand, the New Zealand CAD is the trade I'm in. I could show you that, actually. I just had to refresh my screen over here, guys. I try to look over here periodically at my screen of me just to make sure that the wheel isn't spinning. So would have Guns N' Roses. Yeah, the good old hair metals. I grew up as a kid during those hair metal days. My older sisters was playing Guns N' Roses all the time, and Ozzy Osbourne, Metallica, all that stuff. Good stuff, man. Okay, where was I? So just taking so yeah, we're gonna look at all these yen pairs. But this was another thing. So guys, a part of the reason also that I was watching things like Aussie Swiss and just didn't get into that trade is because pretty much all of these scores have regressed a handful of points since the early part of the week. Okay, a lot of people were, well, a lot of these things were going to neutral, and it wasn't a big surprise because they were basically waiting for the NFP, the non-farm payroll, to come out. And now it's not even coming out. So all these scores are kind of contracting back to the mean. In other words, they're coming back to the neutral status. Like over here, if I just show you just the neutrals, okay, the neutrals list has grown quite a bit. There's your Bitcoin -1, your Dow, your indices are neutral, but actually are starting to give some decently bearish looks. Okay, there's your NASDAQ, your Nikkei -3, Dow -1. So risk off. Okay, this is a risk off environment. If you got Bitcoin going down and the indices, it's not exactly a risk on type of a atmosphere right now. But the neutrals list has grown, and the top setups that are on here have pretty much started going closer towards neutral. Now, there's still a couple that are very bullish. New Zealand yen, Aussie yen, but these were up around +1. These were up at 15 the other day. So think about that. It's gone from 15s and 14s all the way down to 10s and 9s and 8s. Okay. That means the quote currencies, in other words, the yen, has gained a little bit of leverage on those base currencies. So I don't want to say yen strength, but it's just that a lot of these base currencies have kind of regressed just a little bit. Okay? So anyway, that's a long-winded way of saying, that's partly why I just kind of sat on my hands yesterday from getting into any new trades. Now, I did finally get into one, which we'll go through in a second. But anyway, to get over to your pound yen, because I have a tendency of rambling and jumping into other things. Pound yen, we already know it's a bullish bias. The cool thing with pound yen is that we did finally break through this higher. Oh my gosh, how far back did that go? Okay, this which was a weekly supply zone all the way back here. So yeah, we did finally, as you can see, wick through it over the last few days. Actually, the last few days, this year, I should say. So I guess I could probably just go ahead and take this off. Let's see here. That was January 23rd. That was January 13th. Yeah, so we've already chewed through this weekly supply zone. So it's dead. Well, of course it's dead. I've already changed the color on it. Here, let's make it black. There we go. There we go. Now this means it's dead. If you guys ever see a supply or a demand zone on here that's like this color, it just means it's dead. Okay, it's dead, but I still want to remember in my head that, hey, price somewhere down here had the strength, or somewhere in this area had the strength to blow through that higher time frame zone and go beyond it. So I just want to know that if I want to potentially be looking at an area like down here and see if there's this, strong looking demand zone. Now that idea would actually have worked perfect right here. Let's zoom in right here. Show you guys what I was talking about. Okay. So right here, we had price going sideways and dancing around, right? Well, that's not a surprise because at that time we were in this supply zone, right? Price stopped it in its tracks. Think about how strong this candle was. Or this contraction point. Nah, I guess that's not a good example, but what I was going to say is we had a big, strong candle that went into the zone and then just got stopped in its tracks. Is that a surprise? No, not at all, because we hit a higher time frame supply zone. But then price based one more time right here with an indecision candle and then spiked all the way through the rest of the zone. So what happened? What happened on a return to that candle right here? We had a gap down Sunday, 2 Sundays ago. And then what happened? It caught a bid from this indecision candle, this basing candle, these unfilled orders, and price shot all the way back to the top. So I can't utilize that area. If I were to be looking at anything, it'd be this leg right here, right? That wick, it's hard to see, but that wick did go just a little bit higher than this wick over here. So this is my new, okay, this is my impulse leg. Now, I would have preferred it closed up here on a daily, but let's see, did it close above it on a 4-hour? Ah, okay, perfect. So we did get a close, yeah, pretty much, I guess, right at the same spot. But anyway, yeah, guys, the point is we broke this structure up here, just barely, though. I just like to see a structure break with gusto and power. We didn't quite get that. You could even just say that's a double top, right? But nevertheless, this is a higher time frame. So get a pullback down here somewhere to a demand zone, we might have a trade on our hands. Now, as you see, I did draw up this 4-hour demand zone right here, but in no way would I have any interest in trading that because of the fact that we're right underneath this supply zone, which, as you can see, now we chewed through it, but still, I'm just not interested. This is too high on the curve. Okay. Remember, I have to look at this in the context of the swing high and the swing low, just like this. Okay. Buy and discount, sell and premium, don't diddle in the middle. And that's just too high up. Okay. And I don't want to get chopped to pieces. Now, as you see, now I do this all the time. I still put alerts on supply and demand zones, even if they are in the middle or, even if they are high on the curve, just so I can see what happens. I just like to study. For what, I don't know what it is. It's just a fascination I have. Hey, I know this zone does not obey my rules, but I still want to see what it does anyway. Okay. So anyway, obviously the highest probability is to wait for a retracement down to the bottom third, the bottom quadrant, the discount zone. In other words, I don't want to buy high, crab legs at full price. You guys know how expensive crab legs can be. I want crab legs half off, okay, down here in the discount zone. That's your easy way to remember that. And then the other thing about this demand zone up high here, guys, look at the volume spread analysis candles to the bottom. Nothing. Look at that. That's your leg out. That's your leg out volume, that little blue thing right there. Does that look strong? Does that look intimidating? Nah, not to me. Not to me at all. Okay. Too high on the curve and no volume means no way. How often does the top setups page refresh? Is it daily or live? So it's a very dynamic report. So the minute a release, good question. The minute a report is released, it just depends on which report it is, but here's your update interval. So seasonality, daily, retail sentiment, 30 minutes. Yeah, this is, yeah, I mean, I could read this, but you can see that. For all those different types of reports, usually hourly or, daily. PPI. Yeah, CPI is hourly. Employment data, GDP is hourly. Price quotes 15 minutes. And then it shows the time that the last update was updated. And then it shows the next update. How many hours and minutes and seconds and all that. So that's that. Let's see here, latest price. But I see quite often, guys, when these reports come out, I know this says what it says right here under update interval, but I think a lot of these get updated way sooner. Because it seems like every time a report comes out off of, over here off Fat Forex Factory, it seems like when I go to top setups, usually within the a half an hour that's updated. So this is probably just their way of saying, hey, our goal is, or we will have it done by this interval. But I think the reality is they get these updates out even sooner, right? It's kind of like when I was with Ola Prime, right? Ola Prime, they guarantee 1 hour payouts, which is the fastest in the industry. But a lot of the times, people get paid within like 15 minutes to 30 minutes. So they just say an hour to kind of cover their tracks. But they, get paid a lot sooner. All right. Oh yeah, and then price quotes. Yeah, this is Trader Nick is a very transparent guy. Everything he does, everything he creates, he writes up instructions, videos for everything. So that's what I like about him. That's what I like about the Edge Finder and the stock box as well over here, guys. It's just anything, everything you need, man, to make you succeed, help you succeed. Now, again, this is not the end all be all. This alone, the stock box, the Edge Finder alone, does not make you the money. You still gotta make your own decisions. It's not a signal service. Just because it says New Zealand yen is the strongest score does not mean go out and smash the buy button right away. You still got to use a chart to time it. Okay. Still got to use the analysis, but the whole purpose of buying anything comes from right here. So anyway, pound yen, just to finish up over here for you. I just don't like all these lazy candles. See how lazy all these wicks are on the bottoms, wicks on the tops. These are nothing more than just some higher time frame indecision candles. See, if I go to a daily, perfect example. Look at that. Indecision candle. You got big wicks above, big wicks below. Same thing with all these candles. So it's going to be hard, not impossible, but I feel like it's going to be kind of hard to drill down into the smaller time frames in this particular price area right here that I'm kind of circling, just because of all, it's basically, you're basically having to account for about 200 pips of range from the tops of these wicks all the way to the bottoms of these wicks. It's about a 200 pip range. That's a big range. That's a big ass range. Now, pound yen moves a ton. We know that much, but still, I want to be able to drill down into a smaller zone, a smaller range. So if I go to a 4 hour, the only zone I had was this one right here, but it's already been touched right here. Okay. This demand zone caught a bid on this price point here and pushed price up. So it's dead to me. All these candles, they all kind of overlap each other, meaning they're efficient. Okay. It's efficient market structure. So there's no inefficiencies. If there's no inefficiencies, then I don't want to be playing around in that territory because there's probably not the best looking, demand zones for unfilled orders for me. Now you can get aggressive, I guess, and buy, pretend like the candle wick itself is a zone like this. But I just, that's usually a lot of the thinner liquidity. When you look at a candle, where's the highest concentration of the volume? Okay, if we isolate just one candle all by itself, it's in the real body. Okay. If I look at this red candle right here with the big wick above, the big wick below, typically, not all the time, but typically the highest concentration of where trades actually occurred was in the body itself, not as much on the wicks. Okay. Now, another way to kind of look at that is pull up your volume profile. Okay, this is a volume profile indicator right here. And if in this case, since we just have a wick to go off of, then perhaps we can just look at some recent price action, see where the highest concentration of volume was. So I'm basically looking at these 3 or 4 days back here before this wick. And you can see, look at that. I got 3, pointed controls in a row, like basically the same area. So if I'm trying to just find a place to buy, even though I don't have any real bodies to depend on, I'd probably just look to buy in this area. So it's basically the center of the wick. And just real quick, guys, on volume profile, a point of control just simply means, in that given day, because this is a daily volume profile. In that single day, where was the highest concentration of trades that occurred? Okay. This is basically starts at Asia session and ends at the end of New York. Okay. You got your high point, you got your low point, and then somewhere you're going to have a white line sticking out that shows the price point that had the highest trading activity. And that just so happened to be right here where that white line is. So the 210.50 area, okay, on this particular day, I just went to a random day to show you. But 210.5 was your highest traded period of the day right there. You can see that by the bullish trading here, the bearish trading here. You add it all together, that's your point of control. That's where buyers and sellers agreed on price. Okay, that's fair value. Fair value. Okay. So when I see fair value, because I know that everybody likes trading that zone, well, that's a pretty decent way of saying, hey, if we get a retracement all the way down here, even though I don't have any real bodies on a higher time frame, perhaps I just look at this trio of points of control as a potential place to buy right here. Okay. But anyway, that's 4-hour time frame. Let's turn that off. Yeah, SVP, if you guys are ever looking for it. Session volume profile. Or you actually have one here that's a fixed range volume profile. That's in one of these tabs over here. Fixed volume profile. Where's it at? It's over in one of these spots. Where is it? Fixed volume profile. No, it's here somewhere. See, I have it saved as a favorite because I always sometimes can't find things. Yeah, right here. Fixed range volume profile, guys. It's going to be on this tab here. But anyway, if you get the fixed volume profile, then the cool thing you can do with this is you can just kind of use it like an anchored VWAP, meaning you can just select any point and then see your point of control over a specified range. So it's a really cool way of looking at specific areas. Great example right here for the pound yen. Look where the point of control is. It's right at this demand zone down here on a smaller time frame. Right there. What is it, 30 minutes? Yeah, 30-minute demand zone right there. Just so happens to have a point of control below. So if I were getting into this trade, something that would keep you conservative is putting your stop loss below the point of control. Right? Below that white line, because that white line is the highest concentration of volume. So it's just, something, if you want to give yourself some wiggle room, perhaps you drop it a little lower. So that's kind of some cool things. I don't want to get off too much of a tangent on that, but yeah, point of control, volume profile, pretty good way of giving you an idea where all the trading is taking place. All right, let's take a look on the chat real quick. Look at all those points of control potential, but within demand zone already being hit. I am undecided as it may continue down to the next demand zone. 208.84. Oh, you're going way down. Yep. Yeah. Well, that's my favorite too. Well, 208. Yeah. Yeah, that's the same place I'm looking, man. This is our day. This is our confluence. This is daily, and there's a 4-hour inside of it. That's my favorite. Yep. Yep. You're looking at the same place I am. I mean, we could try to mess around up where price is at, but when in doubt, zoom out, right? And when we zoom out, what do I see? Just a lot of choppy sideways action here, which is pretty much the same as over here. That's why I just wasn't real interested in looking at the wick by itself. We didn't have any real bodies. Yes, we broke the structure up here, but it didn't close on a higher time frame. It didn't go beyond it very far. So this whole area, I'm just not really interested in. I need a bigger discount. So right there with you, my guy. Right there with you. All right, we had some other alerts hit. So let's go look. I wanted to look again at Aussie Swiss. Okay, that's a day. That's a 4-hour. I got too much crap on here. Okay, clearly got a 4-hour demand down here. So we're still a ways away on Aussie Swiss for the higher probabilities, which is probably where I'm just going to stay. Yeah. Yeah, because down here on this 4-hour, I've basically got a smaller time frame zone at the top and a zone at the bottom. Let me see here. Yeah, we're still a ways away. I'm just not interested in any of this. This is just too expensive. Get rid of all these lines. Just not feeling it. Okay. Lower lows, lower highs. It's just kind of getting annoying, like a mosquito that you can't shake. That's old news there. Yes, we did hit this zone here. You'll have another look at it real quick. A 2-hour. So it is hitting the 2-hour. What about my volume down beneath? See, here's the challenge though. When you it's a decent looking zone. Problem is we have a gap below it. Okay. If we have a gap below it, then I would expect that the banks would probably want to go attack it. Right. Let's just go ahead and draw up because it is a 4-hour zone. I just didn't draw it up because it's like monstrous. But if we're looking at the 4-hour demand zone, we're looking at that red candle. And then obviously the lowest point. So there's the 4-hour. Okay. But then you go down to the 2-hour and you can see our 2-hour zone, but it's above it. Okay. If there's a gap underneath, then I don't know that I want to be getting hung out to dry up here in the middle. So I'm going to ignore it. In fact, I'm just going to delete it, ladies and gents. A couple things I dislike about that zone, besides the fact that there's inefficiencies below it, is the fact that just like with our last example, from this demand zone, price did break structure, but it did not close and it retraced most of it. Okay. These 3 candles. That's what did it in for me. So ignoring it, just ignoring the hell out of it, right? 2-hour just doesn't look as pretty down here at the bottom, but there's our 1-hour. Okay. So I'm just going to delete that and just put a line above it. That way I know that that's the proximal line of the demand zone, the 1-hour demand zone. And that right there would be my buy point. You see, I got another line below. So that's a smaller time frame confluence, smaller time frame touch of this, the proximal line of the demand zone. Okay. So yeah, I'm going to change my alert now. And I'm going to put this out through next Friday because I like it. I usually just end my alerts at the end of the current week I'm working on. But for this one, I'm going to stick it out because I really love this zone. This is beautiful, guys. This is as beautiful. Well, this is as pretty as it gets. Longer term, we hit this demand zone down here. This is a daily right here. Okay. So we have the benefit of knowing that we are going up. We got higher highs. We got higher lows. 4-hour chart. You can even do this number right here, kind of connect some of these lows. Okay. Have price continue to come down, bounce into the zone. The demand zone confluence is down here. Okay. You got a nice trade to the top. That's as pretty as it gets right there. That is as pretty as it gets. But yeah, part of the reason I was watching this area to begin with was because we did have a double top, and I thought could kind of act as this resistance turning into support. And like I said earlier, it did work. Okay, because we did get that bounce from this demand zone, and we got up here. So in worst case scenario, I probably would have just moved it to break even, have a free trade, because I probably wouldn't have moved it too much higher unless we would have obviously broken the structure. It rolled around, would have stopped me out for a small win anyway, cup of coffee. So anyway, that's Aussie Swiss. Go ahead and delete that. Amazon, I'm going to delete that because I think I put in a new alert. No, I need to put in a new alert actually. Here, I'm just going to put an alert up here. I'll look at this after the regular market opens up. and we'll take a look at some other assets. Okay, so Aussie yen or Aussie CAD. Let's look at Aussie CAD because that's the one I got in on my new account. Aussie CAD. Okay, so on Aussie CAD, it's giving us a +7. Okay, so a nice bullish score. Stepping back to the higher time frames, just like a lot of these Aussie pairs, nice series of higher highs, higher lows. This one is a little higher on the curve, as you can see, because if it just depends on how you look at your analysis. If we're looking at our swing low down here, then obviously, this would obviously be in the middle, would it not? Okay. But I went ahead and bought into it anyway because I was kind of looking at this a little differently. This is the challenge with subjectivity. What I see, somebody else may not see. What they see, I may not see, or maybe I look at it a little different. So basically, on this, I should clarify. I try not to buy out here in the middle like this, but if I have a strong enough score on the edge finder, then that will push me to do it. The reason I say that because I spent all year last year waiting on a lot of these just big retracements down to the bottom. They just never made it. They would always catch a bid higher up. So after missing a whole lot of trades, okay, not losing anything, but not winning anything either. After missing a lot of these, I started getting a little more aggressive. This is just for me. But it's easy to get aggressive when you see a zone like that. I mean, that's just as beautiful of a gap above it as it gets. Look at this gap. Is that not a sexy looking gap right there? Okay. This little push away gap right here, fair value gap. That's the kind of gaps I like to see. Gaps with gusto. Okay. That's strong. That's in other words, demand is heavily exceeding supply if it can push and make that big of a gap. And if demand is heavily exceeding supply, then on its retracement, I want to take a small stab at it. And I only did a small position on this. Okay. Again, this was actually my first trade of my new account. So just real quick, guys, like I said, 8 and 21 on the EMA. I want to make sure that the 8 is above the 21. Okay. So that's where things start. I do that on a daily. Hey, is my 8 above the 21? It is. Okay, check. Now there's a couple time frames, but one time frame is, let's go down to a 1 hour. This is the main one, by the way. Okay. Go down to the 1 hour. And on the 1 hour, I want to make sure my 50 is above my 200. So in this case, the light blue is my 50. The dark blue is my 200. Is my 50 above my 200? Okay, great. Wait for a retracement down. And the rules state wait for a bounce from the 50 or the 200. So with me, I just wait for the bigger retracement because I like discounts, guys. I don't like getting in and front running trades high on the curve. This one down here, this obviously the entry would be down here, but that's if I use the 1 hour time frame. Now there's a scalping method where you could go down to the 15 or 30 actually. Was it 30 I used? Let me double check here. Oh, okay. Well, I should specify between the 50 and the 200 is what I meant to say, guys. So remember, I'm new at this, so this is my new account. But anyway, it basically kind of acts as a dynamic demand zone or supply zone if this were a downtrend. Basically, the space between your 50 and your 200. Now that was the instructions I was given, but I added my instruction of, hey, I'll buy in that zone, in that area, if I get a demand zone. And lo and behold, I got a very strong demand zone. So took a stab at it. Took a stab at it. So I ended up buying in here before bed last night and got a little bounce, but as you can see, it's just kind of retracing. So we'll just let it go and do its thing. Like I said, I don't want to get too deep into that strategy just yet since I just studied it last Friday for the first time. This is part of the club I'm working with, trading club. So we'll digress from that. What else you guys got for me? Anything else out there? Any other items that you're looking to trade? Oh, that's an interesting note, by the way, guys. The dollar index itself has come back to the bullish side. This thing was on the bear side just last week, just what, a few days ago or last week? Remember, Nick added the US dollar into the top setups. So that's pretty radical right there. That's pretty awesome. Look at the buck. Okay. It's got a few things going against it, chiefly the jobs numbers, guys. Jobs numbers aren't doing great at all. But everything else is looking all right, save the consumer confidence. I used to use 3 EMAs like you are trying, but now I just use a 200 EMA and only trade if price is extended well away from the 200. Yeah. Yeah, I've never been big on moving averages. I really haven't. I've started getting into it a little bit, a tiny bit, I would say, over the last few months, just mainly because like the times that Nick pulls it up on his screen. Whenever he pulls it up, sometimes I'll look at it. I'm like, yeah, okay, that makes sense. Because whenever I'm looking at his charts, I'm looking at the zones. I'm looking at the zones as if I see them. And sometimes I've noticed where the zones I'll be looking at or just so happen to be matching up with a 200 or a 50 or whatever it is he's got on there. Actually, I think his zones, and I've got his zones saved. Let me turn that off. This is a different set of moving averages. Yeah, this is I think the ones that he uses. 20, 50, 100, 200. But I think simple. I think there's a simple. I don't know. I may be off, but I'm pretty sure these are the ones that I saved on here just because that's what he uses. Oh, yeah, actually, I saved those because on the Edge Finder now, we actually have it as a study. Where's my technicals at? Technical scenario backtest, is it? I think this is it right here. Yeah, guys, he's got all these awesome scenario backtests. And I got to admit, I haven't really delved too deep into this stuff yet. But it's, yeah, here we go. So moving averages, 20, 50, 200, 200. So that's the ones I got saved. Oh, that's Amazon again. See, Amazon's hitting my alerts, but I can't trade it for another hour. All right, Amazon, I'll come back to you later. Quit bugging me. Stop bugging me. I can't even touch you for an hour. Can't touch you. 3 EMAs stop me getting the too many trades. Well, that's the thing. So I'll just show you. I just take, let's see here. Well, where's it at? Yeah, this is basically what I'm kind of looking at right here. Backbone, scalping, nylon crossover. So again, 828 have to be in the same direction for the trend. And then 5,200 for the 1 hour. Price must retrace to the moving averages. And the key is RSI has to be oversold, but below 20. So we look at 20 and 80 on RSI, not, 70, 30. And then whenever price goes overbought or oversold, whenever it touches the moving averages, you got to wait for that hourly candle to close in the direction you want it to go first, and then buy on the next candle. So that's kind of how that works. Swing low, swing high. Just make sure you're retracing 50% of that move. Then you can obviously use support resistance, confirmation, and pin bars, all that kind of fun stuff. So anyway, yeah, that's kind of what I'm looking at, but I don't want to really talk too much about it since I've only got 1 week experience. But yeah, nevertheless, it's basically just kind of I'm using it as a filter system. So those moving averages I have noticed have kind of helped out on maybe me ignoring a zone or two that I normally would have just bought into. So, it's kind of funny just to kind of reflect on 12 years of trading. Because when I first learned supply and demand zones, I was buying everything I could get my hands on or selling. Okay. Every zone I could see. It was kind of like a baby scorpion. If you guys have ever heard about baby scorpions, okay, what can they not control? They can't control their stingers, right? They can't control their stingers as far as the amount of venom that they shoot out, right? I was that baby scorpion. I couldn't control my buy and sell button. So along the course of 12 years of trading, um, that's where I really focused on the nuances, because the basics of trading are simple. Okay? Look for a box, look for a gap, hit the buy or sell button. You're good to go. That's the basics. As basic as it gets. But the nuances, man, the all the odds enhancers, and everything that helps to really, um, everything that kind of keeps you in a trade or keeps you away from getting in a trade, like your odds enhancers. Like, these are my odds enhancers, guys. This is what took me a decade to really master and figure out, is how to filter out zones that ain't going to be good. Volume spikes, RSI divergences, breaks the structure. Okay, I use anchored VWAP to a point at times, but supply and demand, fair value gaps, something called the master pattern. Okay, buying under value, selling over value. It's kind of another way of looking at curve analysis. And then stuff I use now and then, but not as prevalent. Well, VWAP, yeah. So that's basically it. Fibs, okay, support resistance. See, these are things that a lot of people use all the time. I barely use them, and I'll only flip to them oftentimes just to see, hey, where's the retail crowd going? Because I'm trying to think like a bank and figure out where their liquidity is at. If I can find the retail crowd's liquidity, well, I know the banks know where it's at. So I'm going to go try to utilize that to get into a trade as a bank would. So, yeah, let's go take a look at some of these other zones, some of these other alerts over here. Swiss yen, New Zealand dollar. So yeah, New Zealand dollar. I mean, this thing's given a bullish 5, but as you can see, we're pretty high up on the curve. So at this point, I'm just kind of playing around with well, it's even below the moving averages. So yeah, I can't really get into that. Wait a minute. Let's take another look at this. So we did drop below the 20 right there on that candle. Ooh. I think that one might have not worked out though. Yeah. Well, and the idea is that, they basically said to leave a 50 pip stop loss on a lot of these assets. So let's go take a look. Oh, yeah. I guess that would still be in. I guess that's technically oh, that's right. I was waiting on this demand zone over here. So, yeah, that's right. I'm waiting on this 4-hour demand zone on a New Zealand dollar. Now, again, it's pretty high on the curve, but because I'm testing out this other strategy, it doesn't really take that into consideration. So, but it is just above the 38.2. I know a lot of people use 38.2. I know Trader Nick uses 38.2 here and there on some strong assets. And that's the thing. That's the key. Okay, it's curve analysis. I really am strict on if it's not giving me a great score. But if it's giving me a high score, yeah, 38.2. I've placed trades up here. I just don't like it. I prefer to trade in the discount zones. Okay. Even lower than the 61.8 fib level, the golden level, right? I like going down to the bottom quadrant, the bottom third. So 66 or higher, right? 66%. But we're not too far, and this may be a trade I hop into today, partly because, okay, bullish score, 38.2, demand zone here, which also had 3 big green candles leaving the zone. You could see the volume, the VSA, the volume spread analysis candles grew as price came out. That's a very nice, other side of the U shape. Obviously break the structure there, kept going. 1-hour time frame. If we flip down here, you can see just before the zone, we did bounce into the under 20 level. What about 15? Yes, yeah. Not really getting a whole lot of help, I don't think, on this the 15 or the 5. So I can't really look at that in the terms of the scalp. Yeah. That would have been a damn good entry if price would have dropped. Let's see. Where's my well, no, I guess it wouldn't have because again, my 50 has to be over the 200 in this case. So it's under. So I couldn't use that. Never mind. Yeah, like I said, still trying to work it out. Still trying to work out all that stuff. All that stuff. But just looking at it, it's pure supply and demand zones. I do like this area. Daily 4-hour confluence, guys. Daily 4-hour confluence. We're not too far away. That very well could be my next trade. Kiwi dollar. Music is me. Feel it in my heart and my soul. Swiss yen. Oh, speaking of, ladies and gents, beginning next week, and I'll have more details on this probably tomorrow, but beginning next week, beginning Monday, I'll actually be a regular contributor on A1 Trading, on Trader Nick's show. Okay. We had a discussion the other night, and he welcomed me aboard. So, yeah, thought I'd let you guys know that. So I'll be on there. I don't know the time slots yet. Not sure exactly. Like I said, I'll get some more details probably today or over the weekend about it. But yeah, I got a little slot for me now. So just thought that was cool. Thought I'd let you guys know that. But yeah, just as always, guys, Trader Nick, you can find him over here. If you don't know already, I always have him saved over here. So Trader Nick, just in case you guys aren't aware of what I'm talking about, go over here to @Trader Nick on YouTube. There's his live section there. Another cool thing you can do is go to his website right here, and which is a1trading.com. Sign up for his free Telegram too, by the way, guys. Alan, one of the contributors on there, he actually writes up some awesome articles every day. I mean, he's really good. Really good. Whatever the topic du jour is, that's what he likes to post. So definitely go sign up for his Telegram service. Again, it's free, so you don't have to pay anything on it. But if you go to A1 live stream tab up here to the top right, then you'll see the schedule each day. Okay. So here's obviously today's schedule. There's tomorrow, Fridays, which I'll be on, by the way, at 9 a.m. Eastern Standard Time. So as soon as I finish, and actually, guys, tomorrow, I'll actually probably stop my stream about 5, maybe 10 minutes early. Just a heads up for tomorrow. So instead of my normal 8 a.m. Central Standard Time, I'll probably stop at like 7:50, just so I can get ready for that stream. So about 5-10 minutes early. Okay. But yeah, down here is kind of a bio of us contributors. There's Nick, there's Marco, there's Chris. All these are good dudes. Alan. Okay. Alan's the one that writes up the articles on, I'm sure, you know, Nick, they all contribute, but Alan is one that does it regularly, I should say. Ivan, okay, Coach James, and then there's me. A cool thing too, guys, if you don't already know, you can click on my socials up here. Okay, this is going to link right straight to the YouTube link you're on as we speak. But if you like the X platform, if you like the Instagram, I do actually post a shorts video every single day through the week, just about whatever the topic du jour is. Hey, what if I'm in a trade, or what did President Trump flap his lips and say, or the Fed chair, or you know, the CPI report release, whatever the topic du jour is. And I like to make a shorts and put it on all my socials. So, but yeah, it's yeah, that's that. That is that. But yeah, I thought it was important to explicitly put this as the first sentence, guys. Trifecta trio of technical, fundamental, and sentiment analysis confluences. Trading is all about the confluences, stacking as many odds in your favor as possible. Okay. So looking at if you like to use oscillators or indicators, making sure that you get as many of those giving you a good signal as possible. Any one thing by itself is not a great trade plan. You got to have multiple things pointing you in the direction. There's the fundamentals pointing us in the bullish direction. Great, I can buy. Okay. For me personally, am I hitting a decent looking demand zone? Okay, great, I can buy. Am I breaking structures to the upside? Am I getting higher highs and higher lows? Any one of those things by themselves is just one piece of information. You need the whole pie. You need the full pizza, man. You need the whole thing. As much as I love and dream every night about supply and demand zones, I don't only buy or sell just because it hits the zone. I got to have other factors in the favor. I got to have other things saying or agreeing with that. Okay, whether it's a trend line bounce, whether it's a resistance becoming support, whether it's the COT report. The big banks agree with me because they bought that same asset on the last report. The sentiment, the retail sentiment, are the retail traders going the opposite of what I think? Okay, great. I like that as a contrarian signal. Okay, the CPI, the PPI, everything, the growth numbers, inflation, the employment. Getting as many of these things in your favor as possible will help you out. And this is single-handedly what changed my account. Guys, on this trading account, on my, I guess I can't log in. But on my trading account, I lost 9,000. I got that thing in $9,000 in a hole, and I successfully navigated the hell out of it just because I started following the trends and the top setups, the fundamental and sentiment analysis, the stuff they're talking about on CNBC. Okay. So just definitely stay tuned to Trader Nick over here, man. I'm telling you, this guy single-handedly is why I do what I do. And it all started with his retail sentiment data right here, because I got to a point where I was trying to find this right here. I looked online, I scoured the web and said, well, where can I find a retail sentiment chart? And it just so happened that he kept it on here on his website for free, just as like a teaser. Okay. So as kind of a teaser. And I used this there for a while thinking this was the end all be all. But then I realized, oh, that's just one piece of this puzzle right here. And then the rest is history. I finally got hooked up with his salesperson, Emily, great woman, and she got me set up. So yeah, that was back in February, and confidence grew, man. Confidence is at all-time highs. We're good to go. So anyway, I get off on tangents from time to time. Sorry about that. Yeah, exactly, Mr. Peeps. So I'm hoping that, more exposure over here on Nick's channel will obviously help boost my channel. Lord knows I could use it. My shorts videos, they do pretty awesome. They do pretty decent. I mean, I'm usually getting several hundred views, as you can see there on my shorts. But when it comes to my live streams, it's a little bit on the slow side. I had a mega 63 views a couple of days ago. I think that's probably my most. So I'll get there. I'm not worried about it, guys. If you build it, they will come. If you just grit and grind. Okay, I subscribe to the grit and grind theory. My favorite NBA team is the Memphis Grizzlies, because that's obviously where I used to live. I used to live in Tennessee. That's where I grew up. And that was their mantra over the last decade or so. Grit and grind, grit and grind. So that's me, grit and grind. Let's see. What else? Whoa. Oh, yeah. I wanted to show you guys Bitcoin. I want to show you guys this. Bitcoin. Oh, you so naughty. Let's go to a monthly chart of, was it monthly? Yeah, monthly chart. So Bitcoin for the first time, has broken the swing low. And I did this yesterday. See, all I did was put up a line, that blue dash line. I always do it to major support resistance lines. But in this case, this was the swing low of this monthly correction before the next big push up. And it went below. So there's your monthly. Let's go to a weekly. Okay. Obviously the same week. Okay. But on the daily, on the daily yesterday, we finally had the first close below that major swing low point right there on that candle. Okay. That Wednesday candle. And obviously here's today's candle. So we dropped below it on Tuesday, but we didn't close. And that looked like, okay, maybe we'll get a rejection to go back up, right? Potentially, possibly. But then you come into the Wednesday candle, okay, and we finally closed below that monthly swing low point. So as if Bitcoin hasn't been getting just, its ass handed to it to begin with, that's just another negative vibe, man. Okay. And think of, and also Treasury Secretary Scott Bessent was, I think, in Congress yesterday or the day before. And you got these guys, you got these congressmen, Democrat congressmen asking, do you have the power to basically bail out Bitcoin? I don't know if you guys heard about this or saw this. In fact, I might even have an article of it. But anyway, they basically asked him if he could bail out Bitcoin. I mean, let's just call it what it is. Bitcoin sinks below 70,000 after Bessent says the U.S. government can't tell banks to bail out crypto. Is that not a bearish? Is that not a negative statement on Bitcoin? Okay. Briefly dipped below on Thursday. Yeah, briefly. It ended up closing below. Obviously, they got heated. It sounds like a lot of the congressmen were hoping that he wasn't going to say what he said, which was, no, we can't bail out. And of course, Bessent is also the chair of the FSOC and said that they do not have the authority to bail out Bitcoin or crypto or any other cryptos, right? So it's just funny that that's being told on the same day that Bitcoin closes on a daily chart for the first time below this monthly swing low. Okay. So who the hell knows where Bitcoin's going now? I mean, if we're looking at just some demand zones down here. Yeah, exactly, Mr. Peeps. Where's the lower demand zones? Well, if we're looking at a monthly chart, we're technically, let's see, yeah, I guess it would be down here. So if we're looking at a monthly chart, this is obviously a zone, but there's two things that I don't like about it as far as, I don't have faith or trust that they would work. Number one, that's a lot of candles to the left. So that's a long, well, I guess I can't really look at it on the monthly like that, but I like this because if we drag this over to the left, we got some more swing highs over here. So form a resistance, right? Form a resistance, potentially become a support. So we very well could get, even if it catches a bid and pushes it up eventually, we still got another $10,000 we could be dropping at least. That's a monthly. Let's go look at a weekly inside. We got a weekly demand. Let's see here. So it looks to me like those candles overlap. So it looks like this would be your weekly demand inside. I'm looking at this, right? Hey, this would be your weekly. What am I doing? I'm getting my colors off. I want that to be orange. And I want that to be lighter orange. So the heavy orange is your monthly. The lighter orange is your weekly. So that weekly demand is still $5,000 away. Now we are in some zones right here. It's just not inside of the the highest time frame. So there is a weekly zone here. Let's go to a daily real quick. All right, we've broken the structure, and now we need to look at this area here. Could we potentially catch a bid here? Well, I love the high volume on this candle here, which is where we're at. We're basically inside of this daily demand zone as we speak. Okay, this candle right here. Now, because there's a wick a little lower and to the left, we'll go ahead and include that as well. And that'd be basically a 2-day demand zone. Okay. So will that hold? Will that give us a bid to the upside? Okay. We'll see. Because we're in it as we speak, are we not? We are currently in a daily demand. But we're in a daily demand with nothing but daily lower lows and lower highs, right? So it's counter trend. It's premature to be trying to buy this market, especially after we had a close below the monthly swing low. Woo! Okay. But you potentially have saving graces with a monthly demand zone right there, a weekly demand zone confluence there. I'm sure if I went to a daily, we might even have a daily inside of here. Okay, let's go take a look. We might as well, since we're here, right? Okay. All right. So we got a demand here. We got demand here. I like this demand because the volume is at least trying to pick up on these leg candles, these leg out candles. I do not like this demand zone because the volume the next day went up, but then it kind of died off. Okay. Just kind of died off. Now we had the basing action, the consolidation on this daily candle right before this, but right before the volume picks back up. So that's why I'm, I'd be a little more interested in this one here. So we have a monthly, we have a monthly, a weekly, and a daily confluence right here, guys. Monthly, weekly, daily confluence. Up here, we just have the daily. Okay, so the daily very well could work out because it's got a very strong ultra high volume candle coming out of the leg out candle. I'm talking about that candle right there. So we'll see if this daily candle, and again, I drew the rectangle around both these candles just because the wick on this candle is a little lower. Okay. But if we can start getting a new series of higher highs and higher lows on a daily or a 4-hour chart, then maybe. But until we get that, I've got no interest in buying Bitcoin, especially since Scott Bessent said that they cannot bail out Bitcoin. Okay. In fact, I did this same example back here when price was back here. I said, we need to get this. And then I dropped it more. We need to get this. And then finally I got tired of it until we finally had a little bit of a break like this. But then as you can see, it just rolled back over again. So yeah, I've got no interest in Bitcoin, man. It's not giving me any good news over here. We are in a risk off atmosphere. The stock markets are going down. Well, I should clarify, the indices are not giving us good scores. Okay, they're in neutral territory, but remember they're down here just in the negatives. I mean, Dow's a -1, NASDAQ is a -3. Okay, so it's all about the currencies right now. Hey, I'm a currency trader. I prefer currencies anyway. I like trading indices because I've done really well with them, but I like the currencies. I just like the relationships between the two, between the two currencies. Seems to me like it's a lot simpler. Everybody's minds are different, but for my mind, hey, what's the relationship? What's the relationship looking like between the currencies? It just seems like it's a little easier to me, okay? Because I only have to worry about 8 currencies. Okay? I mean, I don't pay as much attention to the yuan and the South African rand, but I do pay attention to the yuan to a point because it does have a direct and indirect bearing on the Aussie dollar and even the even the Chinese. I mean, all the US dollar, but just a little more indirect. But for sure, the Aussie dollar, because they've got a lot. They're the biggest import-export partners. Let me see what you got. Yeah, Mr. Peeps. Yeah, I mean, that's the thing. It very well could act as the resistance. I just would not be interested unless we start getting another series of higher highs and lows on the technical side of things. But then I would also have to have the edge finder matchup. So, guys, it's 8 o'clock. I get to rambling sometimes, and time flies, and I don't get everything said I want to say. But yeah, I just wanted to definitely go through Bitcoin just because I thought that was kind of interesting with the Bitcoin news and the fact that we did again hit that monthly, monthly swing low and close below it on a daily. So, the question is, does it just continue to go down, make some newer lows down to this bottom section, or will this general concentration of consolidation, will this catch a bid and move it back up? Who knows? We'll see. But with that, I'll let you guys know how my trades are going tomorrow as well. I'll be back 6:30 a.m. Central Standard Time. Have a wonderful day. Stay safe. Talk to you later.